Good morning. This is Steve O'Hare from Signal Centre, and this morning I'm presenting a gold trade idea on a short-term basis. We're going to drill down through the timeframes from the monthly chart down to the 4-hour chart to try and give a bit of an overall technical outlook on this trade idea, which isn't a straightforward one, so you'll have to bear with me. I'll try and explain it as best I can. The monthly chart, we're looking at this trend line. It's a sloping downwards slightly, but I would really call it a horizontal zone between 1360 and 1392. That's where we're looking to target from this trade idea. We're trading within the monthly Ichimoku cloud, so we expect progress could be hampered. The weekly chart, we can see the trend line higher, the higher lows, and this level of resistance that we've got above, and we believe we're correcting higher to retest this level. Again, we can see the Ichimoku cloud on a weekly basis is causing a stall in this move higher. Momentum has moved lower. We can see on the daily chart with a MACD that we've had a turn in momentum and we've dipped lower. It's just resulted in sideways price action again, which I feel is a positive. So if I try and take away some of these fib lines and explain them in a bit more detail. Our previous trade idea saw this morning doji star formation. We set longs and targeted to move to 1265. It was an AB equals CD correction. Price action has extended above the 61.8 fib and is currently holding below $1,300. So that's quite a psychological level. But if we look backwards, we can see that there was previous backwards and forwards price action here. So this is why we are struggling. Now, if I break it down to a daily chart, again, we can see this a bit of a short-term triangle formation forming. Momentum is flat. So we are expecting maybe a sort of like stall in this price action, or we have seen that. But from the daily chart, we do believe that we will extend higher. We think this is an impulsive third wave. So we'll call this wave 1, wave 2 retracement, and this is the wave 3, which should extend to somewhere around 161.8 fib extension. Let me just get an extension tool on here and show you this. And there we see it coming in around about 1324, 25. So that's what we're seeing at the moment. We believe the move will continue higher. So we were looking at two levels where we can get in. If we get a pullback, which would be in line with this bearish momentum, we could get a pullback to around about 1265. We'd look to set longs around there. This is based really around the stop level being at below 1243. If we do move below 1243, this isn't the impulsive move that we think it is. So setting longs at 1265, stop at 1240. That will provide the ideal risk reward for a move to break $1,300 and move on towards the 1360 level. Which is the really key area of that zonal resistance. So again, let me go over the trade idea. We're looking to buy a dip to 1265, stop at 1240, and we're targeting a move to 1360, and the second target would be 1390. If we don't get this dip, we would look to set longs on a break of 1300, but the stop would need to be a little bit tighter. And we can update that as and when it occurs.